What is up, everybody? Welcome back to the number one stonk in the market. It's GameStop, and it's still going down, but did what we thought today, I guess, which is good. What's up, everybody? So many chats. Maxie's here. What's up? Guido's here. What's up, Tom? Tom's here. Tom made it on time, but I didn't. Oh, there are two chats? What? I hope not. How do we have two chats? Do I see both? Oh, I get to see both. Oh, there's like a mobile icon. This is weird. They just did like mobile integration or something. Can I get. So I have like a vertical broadcast and I have a horizontal broadcast simultaneously. And apparently that means there are two chats. Yeah. Amgo Blue, what's up? Sorry, okay. Wait, I don't know why this one went to one chat. Oh, it's sending it to like both. It's sending me to like both chats. Why are there two chat? Oh man, what this platform's always like doing updates, and it's like we added new features that no one asked for. That no one asked for, and by no one I mean just not me. I'm sure there must have been somebody who asked for this, which is why they did it. Which I guess is good customer service. Confirmed earning announcement date. It's gonna be the 9th. That's gonna be the time when we do it. But getting the confirmation would be good. Maybe they use that as an excuse to make us go back up again. What's up, Marcus? Hey, Sonny's here. What's up, Sonny? Yeah, why are we? I don't know why this is happening. But it's great. Portrait's good. If I'm looking good in portrait, can you choose? That's fine. Bobble Wobble. These are new names. These are great names, though. Cannon Fire. Awesome, dude. What's up? CDLJ27. What's up, dude? Yeah. I guess default that I'm doing is horizontal because that's where you can see the multi-share stuff. What do I look like if I'm, what's the mobile preview? Oh, okay. I can see both. Interesting. All right. Well, we're learning. We're earning that experience. So much exposure. No 10. No 10 from Cole today. 10's always fun. Can have a little 10. Don't cross the chats. Thought you said two Chads. Bro, there are more than two Chads in here. Nothing but Chads. I know, dude. It's kind of boring, right? This talk is so boring, says Day Swag. It's good to see you, man, but yeah, like I said, I think we're what's my primary theory? I guess we're going with now 2023 requel. I guess is what we're looking at. I think I talked about this. Did I talk about this in stream last week, or was it just in videos? I don't remember. How do I make this bigger? Let's make this bigger. There we go. So I posted a little bit about this today that I think we're kind of doing a 2023 requel. Why? It's like, right, what really matters here in like figuring out, you know, when we're going to move and how we're going to move is more or less just getting kind of direction, right? Like that's kind of, I think, the best you can kind of hope for with GameStop is getting the pivot points. That's the real thing, right? That's the real challenge. And if you can get the pivot points right, if you can figure out when you're going to do the pivot points, if you can get that down even to within a couple days, that's where you can really just, you can run away with it, and then that can scale. So it's a very excellent approach. Very difficult to do that. So basically, my thought here in looking back at 2023 is that we look to be having some very similar pivot points in our year here, right? I think I did talk about this a little bit in last week's stream, but if we going into 2023, right? So we had, let's see, this is 2022. Early 2023, we kind of started a little bit up. We didn't have a down cycle. Well, we went down. 2022, we were down for most of December. We're definitely different from 2022. 2022 is kind of a interesting year there. Did we do a 2022 earlier this year? No, not so much. So, right, our earnings behavior in 2023 was very similar to what we just did, right? This move up. The difference is Ryan Cohen offered into this bit here so that we just shot right back down. And then we did this run up into June, right? So we shot back down over here. And then we did a run into June. And then they did a little extra thing there with the Bitcoin deal. So over here. But similar type of event, right? Right there in June. And then we went on a very, very long trajectory down all the way to the 27th, I think, 24th of November. If we zoom in a little bit. So what happened this time around? All right, Ryan Cohen offered here. So that teleported us right here. Right, so here was the floor set prior to the Q2 earnings move. And then we got this slow move down, right? All right, we launched up. And then it took us all the way back down here. And we go over here. Then it took us way into Q2 earnings to get all the way back down here. We did the same thing, right? This price point here and this price point here are essentially equivalent to what we just did. Except we just sat down here, right? We just sat down here the whole time. And then when it was time to move up, then we moved up. So we just teleported down at a right angle and then just went sideways rather than, so this way Cohen got to actually get money for the company out of this. And then, so rather than kind of slowly doing what we're doing essentially now into Q2 earnings. Then Q2 earnings back in 2023 were up. And then following Q2 earnings, we started to go down. But what was different, of course, this time Q2 earnings were actually good this year. And we had the warrant announcement. So we got lifted up into the warrant announcement, and then they distributed on everybody here. But essentially, what it looks like compared to 2023 is whatever we had here right before we lifted up into Q3 earnings, whatever this price point was, we need to get back here. We need to get down here. They need to get us down here. And only when we were going into earnings, which ended up being better than they thought, did we really start to move up again, I guess. So wherever they're taking us now, it's probably going to be something similar. So, I mean, if that theory holds up, if the kind of 2023 requel thing holds up, we're probably heading into at least OPEX, but probably a little bit before this. Probably like another 2 weeks of this, which sucks. But maybe we just kind of flatten out, right? Doesn't mean we necessarily go to, the meme is like 17 or 16 or something like that, right? Doesn't necessarily mean that, but So I mean that's more or less what I'm looking at here. I know that's not a super awesome thing to to ponder. But yeah, that I think is excuse me, where we're stuck right now. Do I think we bottom today or we go lower next week? I've heard some folks talk about us kind of going to 1950-ish. I mean, they say 19. They don't mean 19. They mean the 19s. That would be our low prior to the cash acquisition of the second offering. The second offering, sorry, the Q2 offering. So the third offering in 2024. That's where that's where that price would take us. So if Ryan Cohen has spent some of the money, maybe, right? Because what they're doing, it seems, is they're justifying these valuations by saying that the bonds are debt, right? All of the cash from the bonds, that is debt. Even though it's 0% and it's free money for 7 years, that's debt. So that doesn't count. That doesn't go into the cash valuation. That doesn't raise our floor. That's essentially what this pricing is kind of saying. So excuse me, if Ryan Cohen has spent some of the cash pile otherwise, combine that with some of the depreciation in Bitcoin, combine with the fact that we're getting rate cuts, I suppose. So that means that interest on treasuries potentially is going down. There could be some justification for saying, okay, that drops our floor, but to drop it all the way back to 1950 would imply something like some kind of a loss of hundreds of millions of dollars, right? Something like 500 to 800 million dollars. If Ryan Cohen spent that cash, maybe, but not sure. So my initial idea of seeing this was to expect to see something like this as a double bottom, maybe. It's not what I thought. Some people have tossed that out there. Do I think it's possible we go to 1950? I didn't think it was possible that we would come here under normal circumstances, but then again, I didn't consider the possibility of Ryan Cohen spending the cash. The fat pitch stuff, I think I mentioned this earlier in the week. The fat pitch memes do make me think they spent a chunk of the cash, that they might be sending some memes to alert, I suppose, the community to something like that. So if they did, if they spent 800 million, then maybe we do, but not sure. Hello, TCM King. Is that Turner Classic Movies, by the way, TCM King? Great channel. Love Turner Classic Movies. Two. Yeah, we're getting those ultimator signals again, right? Let's collapse PMO for a bit. We're still having a good time, right? PMO wise. Top of that support line, daily PMO does not look good, but I mean this thing gotta start moving back up eventually, right? Like, what is going on? Oh, excuse me. But let's see. Bottom finder. Yep, up she goes. Again. Right in a row like this, huh? I mean, this is already, right? It's going off, giving us those values. I mean, this is special. This is not something we have seen in a very long time. You know, this thing here in January 23 was maybe another reason why I thought we were doing some 23 stuff, but really you gotta go back pre-sneeze to start to see this stuff. And then you realize how ridiculous the pre-sneeze was because of this. That's really something. Really. I mean, this stuff here is small potatoes by comparison. But there's really nothing like what we're seeing right now in terms of the magnitude of, say, manipulation through swaps. There's really been nothing like this since prior to the sneeze. It's not like what we had prior to the sneeze, but there's been nothing like this since prior to the sneeze. Horizontals is where it's at. That's where we are. Ha! May 26. Yeah, May 26, I think, could be an opportunity to move back up. What do we do in May of? Well, I mean, it would be this. To do this. I mean, I don't know if we do this. I don't think we do this again. But, you know, maybe something like this, but with a higher floor, right? To get the bottom portion of this. Because these tops, like whatever this stuff was, right? How much of this was driven by Roaring Kitty? How much did he really knock that higher? We don't know. But this move, this stuff, yeah, it's pretty cool. You know, to go from 10 to 25 reliably, it's pretty cool. You know, to go from 20 to 50, that'd be tight. I could do $50 next year by May. That'd be fun. Hello, Camo Sadia Dia. That's a cool name. What? We have to see this. I'm going over to QuiverQuant. Let's take a look at the filings. Actually, these were cool. So we got little 22K. Bank of America almost doubled their position. That's cool. Wolverine actually picking up some shares. About time. Title Investments, 150K shares. Nomura picked up 150K. 82K. Brooklyn 17K. UBS AM picked up 376K. So we got some accumulation here. Susquehanna picking up 3.5 million shares. What is good, dude? We like to see that. That's the single biggest purchase I think we've seen. So yeah, I was right. These guys, these guys who had positive positions saved it until the very end. Do you notice this? 134,000 from Venetian. 29K from HBK Investments. State Street cut just 92K, so basically stayed the same. Blackbird Asset Management picking up 329,000. Yeah, Marshall Wace with the lame position reduction here, 1.4 million. Invesco picking up 200K, right? Obviously, Rentec, seeing them double their position, very cool to see. UBS overall, though, dumping about 2.3 million. So I think, all right, and then VanEck picked up 1.1 million. So I think we're still probably, Bank of Montreal cut their position. Not by a lot, though. 40%. That's decent size. Barclays, 173K. Dimensional Fund down 1.3. I'd probably say it kind of, maybe it boils down to about neutral. But I mean, these positions here, this is cool. That's some cool accumulation. Obviously, Susquehanna picking up 3.5 million shares is cool. Let's look at derivatives. I mean, do they even have these? Keep in mind, a put position revealed. So that's what, 12,000 puts? It sounds like a lot more when you do it in shares, but that's 12,000 puts, I'm pretty sure. Is it 12,000? It's not 100,000 puts. 12,000 puts. No, it might be. Wait, how do they come up with 100,000? 120,000 puts? Am I doing the orders of magnitude correct here? Am I going crazy? It's getting sleepy, so my brain calculator's getting turned off. They have 126,000 puts? LMR Partners. Are there even this many puts out there? How did they get those? That makes no sense. I guess right now for the whole chain, there are 750,000 puts out. So they've got They've got 17% of all of the put options. Or at least they did on the 30th. But that's the thing. Keep in mind, this is the thing about these puts. Like, they pick these up on the 30th. So they may have just purchased those puts for what we're going through right now. Like, they probably knew this thing was going to happen. And so it was to capture this move. That would be cool. Do we know that he spent cash on Power Packs inventory? Oh, TCM is secret. Yeah, that's how it goes, Amgo Blue. Yeah, the big boy. That's the only way. That's the only way it happens. It's the only way it happens. So chat says dollar move started trending down yesterday. Usually a bullish sign. I mean, the stimulus checks are a bullish sign. I'll say that. If we get stimulus checks or tariff dividends, whatever you want to call them. ICE Bank B of AML US bond market option volatility estimate index is move. Market volatility. Oh, that's what it is. Market option volatility estimate. I see. Yeah. Because that's going to correlate with increasing put values. If overall market option volatility is going up, put values are also going up. And SPY's price is probably going down. September 30th, Wally Waspers. All of these filings are of September 30th. So, yeah, I mean, they could be done with their puts now, essentially. It also, right, a lot of these position changes too that we're seeing with sales, like they could have just sold like on the 30th, right? They could have sold, they could have been like 27 bucks. Fine, sell. That's what I did. I didn't wait till 28. I sold I swung a fair portion of my shares there, and then bought back in again on the downside. Not at $20 though. So you never figure out the bottom. They always surprise you with the bottom. They surprise you. Yeah, 120K contracts. That's a lot. That's a lot. Master. I don't know how sold puts show up. I don't think you don't have to report. Yeah, you don't have to report short positions, I think. That's the that was the thing that they were supposed to have to do back in February, and then they pushed it out a year, remember? Last February they were supposed to have to start filing a form show with their 13Fs. And then they got it delayed. The delay was announced right around the time of the Jimmy Carter thing. Remember? I think that's also part of what killed last year's run was that they weren't going to have to disclose that information. Yeah. Is that all that put selling we've been seeing? I don't think so. I think if you're short the puts, you don't have to report them as an institutional derivatives. Or if you do, then I don't think you have to specifically mark it as a short position. Oh, interesting. I missed that. A couple weeks back, it was all over short form social media that GameStop was going around card shows scooping up inventory. Didn't know that. That's cool though. Yeah, give us those stimmies, dog. I'm ready for stimmies. I'm ready to get hurt again. All right. I learned my lesson back in 2021 that the secret to take it. I learned this right when I was doing my PhD. I was talking about this with some European colleagues today. Right. Um, I learned because I didn't know anything about money. I didn't like understand what was going on with any of that stuff. I was just like, oh, whatever. You just like go out and earn money and then like invest it and then you can have more money. It's great, right? Not like, oh, if you don't, then like your purchasing power degrades like not even just gradually. Because I was like, okay, gradually, but like whatever, like 2% a year. No. Wrong. No. Um, no. In a good year, you're losing whatever the inverse of 7% is in inflation. So somebody can come up with a quick function to do that. It's like 6 point something percent. In a good year, you're losing only like 6% of your purchasing power. Yeah. So I learned the thing that made me look into this stuff, really definitively was like, I gotta get my shit together. I gotta get ready for the next time this thing happens. Because, right, of course, when they said, right, what was declared inflation in 2021? 2020, yeah, 2021, it was 9.8% declared. So it was really like 20, that's, yeah. It was really like minimum 18 that year. And then the next year they were like, oh, it's come down. Now it's 6.8. Okay, so like 14? Right. So in like 2 years, 2021, 2022 was cumulative loss of like a third of your purchasing power with the dollar. Um, minimally bueno. So yeah, so I was like, okay, so wait a second, right? How does that, the thing that's also terrible about that, and this is what I realized. Yale, I remember, because when I was finishing up my PhD, Yale, like, this is the thing to realize about all the big name schools is they all have embedded hedge funds. And those embedded hedge funds are populated with people who all did stuff on Wall Street, and they know how to take advantage of this stuff the right way. So when QE Infinity went on, they positioned themselves in such a way to be able to catch that market pump, and catch it they did. And I remember Yale targets. I think they target like 11 or 12%, maybe aggressively. Like in an aggressive year, they target like 11% return, 12% return on their endowment, which is tens of billions. And I remember in 2022, we learned that end of 2021 or something, we learned that they made 44% on their endowment in like during COVID, which was like $8.5 billion. So it was like, okay, so just be in assets. That's it. Just wait until whatever happens. Then the federal government just does QE, issues stim checks, and then you moon, whatever you're in will moon eventually. So this time around, we're ready. We're ready. So naturally, they'll change how it goes. But I think they probably won't pivot too hard on what'll happen in the market if we get stimulus checks and stuff. I worked last time. It'll work again this time. It's not like that many people are going to have it figured out that it won't be profitable for them. It'll be profitable for them. Interesting. If you don't have to report short positions, I see a lot of put spreads that get bought. Like they do poor man's put strat. I see an unusual one. Interesting. Yeah, that's very interesting. If only one leg shows up reported, that gives the wrong impression, because then they're short puts at different strikes. Interesting. Oh, nice. So we are Fintel. Thank you, Wally. Institutional ownership officially has increased by 3 million shares. Hell yeah, brother. That's awesome. Guys, that's great news. Getting up, pushing that 50% institutional ownership. Dudes, they're accumulating, man. This is it. I think they're getting ready for, like, I don't know how soon it's going to happen. I think it's probably, me and the boys, what we were talking about this, I don't know, maybe last week, one of last week's videos, you know, even when I thought we had a chance at some upper volatility in November, that I think they used the Trump tweet to actually like make that thing happen earlier. They might not let this thing go really up until once we get the annual report. But it doesn't mean they won't let us pump for earnings for Q3, which will be a good beat again. Region Formal's thing was really good on that. I think he's got 32 cents per share projected. That'd be tight, dude. That'd be lit. Yeah, declared inflation was, I think, like 9.6 or 9.7, which means real inflation was like 17 or 18. I happen to put stock in Shadow Stats. I think they make a good case for understanding. Right, they make a good case on the manipulation of the CPI data. It makes sense when you look at how S&P 500 has accumulated. If you do total inflation by the original way of calculating CPI up to 1983, if you use that way and you use that weighting for total inflation, and you line that up with SPY, it's the same. We talked about this back in the Thailand days. If you do, it's not quite the same. I think SPY comes out a little ahead. But it's like 100%. It's like 100% return on investment over 40 years, which isn't the however many hundreds of percent is suggested, by the real CPI data. It's still better than anything, it's still better than losing all of your purchasing power. But yeah, real inflation is going to be anywhere from 5 to 7 percentage points higher than what declared inflation is. So if it says 2, it's 7. If it says 10, it's like 17, 18%. Yeah. The only thing that changed is after 2008, 2009, they stopped changing the rate at which they stopped changing it. So it's like they kept changing it slightly, little by little, and then kind of drastically. So like there weren't too many changes from 83 to 90. And then in like 90, so like as Bush 1 was going out and then into early Clinton, then they like really started to change it. And then late Clinton, they changed it again. Then Bush 2 also changed it like 2 or 3 more times. And then maybe they did it like 1 more time at the beginning of Obama when they were trying to fix when they were doing whatever they did for the financial crisis then, in like 08 and 09. And then they just said, okay, let's stop changing it more. Because if you look at Shadow Stats and you look at the chart, in fact, I can bring this up so you can see what I'm talking about. Yeah, here you go. This one. Right, so you look 83, it starts to diverge. So the red line is this is if you keep the pre-1983 metric. If you keep this stable. Sorry. Red line is declared CPI. Blue line is 1980 base metric. So pre-83 change. So as you look, 83, 88, they don't change that much. They're not that different in the 80s. They change a little bit, right? I mean, you're looking at less of a percent difference. Less of a percentage point. Less than a percentage point difference here. Then 88, they get a little bit more different, but they're still pretty similar. 93, 90, like 90 and then 93, it starts to diverge again pretty notably, where they say, oh yeah, no. They say from 90 until 97, they said inflation was 2.5% the whole time, when If you go by the 1980 metric, it didn't go below 5. And it went up to like 7 or 8 when they said it went down to 1.5. Right? So you can see the degree of difference continues to increase. How different they are continues to increase until 08. And then they stop getting more different. Like they're super far apart, but this is by like 7 percentage points, I think. Right? This is 12 and this is 4. So this is 8. This is 7 to 8 percentage points here. And we remain that way. So when we got up to almost 10, yeah, we were at like 17. Right? So 08, they did us the favor of stop making them more different. But they, as different as they were, they just left it that way. Oh, wait, why can't... Oh, no. Oh, no. I forgot to have the layout. It should... No. All right, well, I can do this again. I know you all just heard me say that, but now you can look at... I was pointing at it with the mouse. It was great, guys. It was great. I did lots of pointing. You guys would have loved how much pointing there was if you could see me point. But yeah. Right. So once again, just quickly go through this so you can see this with the chart. Right. 83 to 88, not really that different. 88, 90, it starts to get more different. 93, it really starts to get kind of different. And then they really take off. Right. You can see, you can go check this out, shadowstats.com. If you use the 1980 metric, very, very significant discrepancies between inflation. So blue line up at the top is pre-1980 inflation metric. And red line is how they changed it after 83. Yeah, but it depends. So Perstyle says, put selling and buying was always strange to me. Selling is the obligation to buy and buying is the obligation to sell. So buying put should be short, selling put should be long. It has to do with a hold orientation. So if you are in possession of what the instrument is that you are trading, then you are long that. Long has to do with your hold orientation. If you are long stock, you have the shares. If you are long options, you hold the options. If you are short the stock, it means you don't have it. You need to buy it back. You don't have it, you need to go out and get it. You're short. That just like if you're short $1, you're out $1. It's $1 you don't have. If you're long $1, it's $1 you have. All right. So if you're short an option, if you're short a put, okay, the instrument is a put. And it's the contract itself, right? So you got to think in tokenized terms. You're tokenizing the contract. The contract is a token you can trade. That token, even though it has special properties to it and behaviors, you are short that token if you do not have it in your possession. So if you sell a put to open, you are short it because you are not in possession of the token. You cannot, for example, this is why it's called an option. You cannot exercise the contract if you are short the contract. You do not hold it. You are not entitled to the option that's in the option. It's whoever is holding the contract. That's who has the option. So if you're short a call, you don't get to choose when the call is exercised. So you don't, because you don't have it. If you're short a put, you don't get to choose what happens. You don't have an option. You have no option. The option lies with the person who is long that contract. So that's why it's that way. It's a holding orientation. Yeah, I'm seeing this now. Sorry. 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 Are we banging the close? Is this chart up? Yeah. Let's go to the 1 minute. Oh, it's not that bad. We're still above like 2050, right? Just kind of low. Just kind of, I mean, just kind of shoot down a little bit there. I'm gonna shoot. Yeah, we bounced off that initial low. Not bad. Do I have Q3 revenue predictions? I have not done a Q3 revenue calculation yet. I have not put myself through a projection just yet. I mean, I like the way regions sound. He does a good job taking a look at yeah, like I wonder how he gets his foot traffic data actually. Yeah, actually, I have to check out Budget for Life. I just started hearing about Budget for Life. We'll see how this guy's going. $224 million profits would be cool. Up to it's up to September. No. Is it up to September 30th? No. RQ3 ended in October, I think. Because RQ1 is February to May, then May to May, June, July, August, May to August, and then August, September, October, early November. So I think it ended like a couple days into November. Does that sound right? Oh, what's up, dude? Are you gonna sign on puts? That'd be tight. Nice, dude. Welcome to the club, bro. Dude, nice. Beautiful. Beautiful. Look at us. Look at us. Who would have thought, man? Who would have thought? In the year of our Lord, 2025, we'd be getting a sign on $21 puts. Look at us. Not this guy. Not this time. We made it up. It's fiction. Nice, dude. Are you one of the only people that has that contract? What's the OI? For OPEX, OI is 927 for this week. What is it? Oh, higher. Interesting. 1900. Okay, all right. Some people got in on that. Liquidity is still bad on options, man. It's not good. How do I feel about selling deep in the money puts 1 year out? Um, yeah, I mean, sort of like depends how deep it goes, but it's like betting on a cool upside thing, but you get the cash up front. So you get the cash of the trade up front, and then if we moon, then pretty cool. It's not what I'm doing right now, but you can do that. It's the current year. You can just do things, okay? You can read a book. You can just do things. That's like one of the recent Twitter trends, right? You can read a book. You can just do things. You can make your own sourdough, okay? You can just do things. An announcement for no additional dilution through physical year. Fiscal year, I imagine you meant to say. Next year could help. Um, yeah, I mean that would probably make it go up. But look, the thing is, the bonds aren't. This is the thing. The bonds aren't dilution yet, but they're treating them like they treat them like they are to a certain extent, I guess, which is annoying. They treated the warrants like dilution, even though it hasn't been diluted yet. This is what's wild about the warrants, right? The warrants, yeah, the warrants do imply that once they're exercised, they'll dilute the company. They're actually non-dilutive. It's non-dilutive to shareholders. But the idea is right. Like they've already, if you look at this with normie goggles, you're saying, warrants, dilution, blah. But like the but like the dilution hasn't been assessed yet because the company hasn't gotten the money from the exercise of the warrants, which should raise how much cash they have on hand. But it's like, the way they're positioning it, they're making it look like the warrants are diluting the company, even though the company doesn't have money from their exercise yet. So how do the warrants dilute if the company doesn't get the money? Part of the idea is the company gets the money for operations and acquisitions and whatever, right? So it is. I will give you. It is. It could wear you out, right? But that's part of the game, I guess. It's cool, man. Yeah, man. Way to go, Mike G. Enjoy those puts. Yeah. No, no, not an attack. Never an attack. The Jedi uses the Force for knowledge and defense, never for attack. Yeah. Sourdough's good though. I just noticed it was a trend. That's all. Yeah, so that's my outlook going into these next couple weeks here. I think we are going to have to wait until the end of the month. Maybe we get a little recovery. Um, there's a non-zero chance, I guess we flirt with a little 19 something. Non-zero because, I don't know. I don't have all the information, right? So what I say, it's, we came all the way down here to 2050. We bounced off 2050 like I thought we would. We did not close below 20 like I thought we would earlier today. That indeed, 8 sigma event that wasn't going to happen today. So felt pretty confident. Felt pretty confident in calling that out on Twitter. But could we slip a little lower next week? Sure. I think we still got we have 2 weeks of opportunity for that to happen, and then I think we start moving up. I think we even start to see a little bit of recovery, a little bit of foot off the gas, kind of coming out of OPEX. Honestly, right? Like, how much money is there to be made by pushing this farther to the downside? I guess if you're going to pump it on the other side, then a lot, because it's about positioning yourself properly. But in any case, cheers, everybody. Thank you very much for tuning in. Great to see you guys. Have a wonderful weekend. Look forward to seeing you guys next week. We'll take a look at what we got on the docket. Take a look at what's going on options wise. See if we have any stragglers filing stuff at the 13Fs. But so far, 3 million share accumulation, getting up close to 50% institutional ownership. That is stuff that we like to see. We like to see bottom finder going off. We like to see this type of stuff. We like to see parallels with fractal from 2023. We like to see this. We like to see this. This is good stuff. This is good stuff. Stimmy check. We get something like that on top of that. Magnifique. So we'll see you guys next week. Thank you very much as always.